Ladies and gentlemen, good day and welcome to the Adani Power Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities Limited. Thank you, and over to you, sir.
Yeah, thanks, Sagar. On behalf of ICICI Securities, I would like to welcome you all on Q2 FY26 earnings call of Adani Power Limited. Today, we have with us from the management, Mr. S.P. Khalia, CEO, Mr. Dilip Jha, CFO, Mr. Nishit Dave, Head Investor Relations. We'll start with the opening remarks, followed by Q&A. Over to you, sir.
To extend a warm welcome to everyone who has joined us today for our second quarter 25-26 earnings call. I appreciate that you have taken time out of your busy schedule to connect with us. Before we begin, I encourage you to download and review our quarterly results and the analyst presentation, which have been made available on the stock exchanges. With me on the call, I have our CFO, Mr. Dilip Jha, and Nishit Dave, our Investor Relations Head. The Adani portfolio companies has consistently demonstrated their strength with resilience over the past several years. The portfolio scale in terms of investment, revenues, EBITDA, and cash flows has grown by multiples. Focusing on Adani Power, I am proud to share that our company has made a significant contribution to the group's earnings growth during this period. We have navigated a range of challenges in the market and we have emerged stronger each time. Our team has turned these challenges into opportunities, leveraging our experience and agility to drive sustainable growth. Now we are set firmly on our path to raise our generation capacity from 18 gigawatt to 42 gigawatt by 2032, with an even faster growth in earnings and cash flows. We are set to increase our market share in the thermal power sector significantly. We have won new long-term PPAs bids for more than 9 gigawatt out of the 14.5 gigawatt of bids awarded by state so far. In the recently concluded quarter, we have announced the award of a 2400 megawatt PPA in Bihar and 1600 megawatt in Madhya Pradesh. In addition to this, we have also won a 570 megawatt long-term PPA for 25 years recently from Karnataka, which would be supplied from our existing capacity at Raipur. There are another 17 gigawatt of bids which are at various stages of submission currently. Proactive steps are being taken by states and the central government to meet the project long-term requirement of power from all sources. We are highly confident that we will tie up our upcoming capacities under these emerging opportunities. These PPAs will be value accretive for the company. They will enable us to generate higher returns on investment along with steady cash flows. Our capacity expansion drive is progressing rapidly. There are 4 projects currently under construction with a total capacity of 6,120 megawatt. They will be completed in stages between 2026-27 and financial year 28-29. We have fully de-risked our project execution pipeline with 100% advance ordering for boilers, turbines, and generators. This is largely brownfield development and we have 100% land availability. Similarly, most of the environmental clearances have also been granted or are in advanced stage of approval. Our in-house project management capabilities coupled with our financial strength and proactive strategy will enable us to stay well ahead of the competition and deliver projects on time while maintaining a capital cost leadership. We have revived the operations of 600 megawatt Tuticorin plant of Vidarbha Industries Limited, which was acquired in July 2025 within just 2 months. This plant had been shut down for almost 10 years. We have also signed a 500 megawatt PPA for this plant with Maharashtra Discoms for 5 years recently. Now let's talk about our performance during the second quarter of 25-26. We have registered more than 7% growth in power cell volumes in the quarter at 23.7 billion units as compared to 22 billion units in quarter 2 of 25. The year 2025 has seen an unprecedented early onset and much delayed retreat of monsoon in recent memory. This has affected overall power demand and peak demand adversely. Merchant power tariffs have also been subdued because of the prolonged rainy season. As a result, we have achieved PLF of 62.8% for quarter 2, 26 as compared to 66.9% of quarter 2 of 25. In the first half of 26, we have achieved PLF of 64.8% versus 72.3% in first half of 25. Despite this, we were still able to post a growth in volumes with the help of our competitive PPAs, low-cost merchant plants, and increased generation capacity. However, long-term demand growth drivers are intact as they are tied to India's strong economic growth. We expect our PLF to improve as the lingering impacts of weather abate and demand picks up. Adani Power posted total continuing revenue, excluding any one-time prior period items, of rupees 13,707 crores in quarter 2 of 26, which is a slight growth over quarter 2 of 25. Our EBITDA performance for quarter 2 of 26 is also quite stable despite lower tariff realization due to our cost-efficient operations and remunerative PPAs. The continuing EBITDA of 5,325 crores for quarter 2 of 26 is close to the continuing EBITDA of quarter 2 of 2025. Profit after tax for quarter 2 to 2026 is also quite healthy at 2,949 crores and similar to the PAT for quarter 2 of 25. Demonstrating our tight control on debt and finance costs despite the growing scale of operations and ongoing expansion. Looking forward, we expect our power demand growth to pick up again, resulting in improved offtake under long-term contracts as well as greater traction in the short-term market. We intend to tie up more of the open capacity under the PPAs, similar to the recent 1 gigawatt of awards. I look forward to the upcoming commissioning of new capacities from the next financial year onwards, which will lead to the next cycle of rapid earnings growth. Adani Power is excited to play a key role in meeting India's growing energy demand reliably and enhancing its energy security. I would now like to hand over the call to our CFO, Mr. Dilip, to elaborate further on the quarter 2 results. Thank you, and over to you, Dilip.
Thank you, Kailash, and good afternoon, everyone. It is my privilege to present Adani Power's strong and resilient financial performance for the second quarter and first half of the financial year 25-26. Despite unprecedented weather conditions and slower pace of power demand growth, Adani Power has delivered a remarkably strong and stable performance this quarter too. The subdued power demand and weakness in the tariff acted as a constant on revenue growth despite the higher power sales volume. Total continuing revenue for quarter 2 FY26 was 13,639 crore, slightly higher than the revenue of 13,465 crore of quarter 2 last year, a testament to our resilient business model. Total one-time prior period income recognition for quarter 2 was rupees 669 crore, mainly pertaining to old matter and late payment surcharge. For quarter 2 FY25, this item was broadly similar at rupees 598 crore. For the first half of FY26, Total continuing revenue was 27,807 crore compared to rupees 28,517 crore in FY25. For H1 26, prior period revenue was 1,075 crore, again similar to the H1 25 figure of rupees 1,020 crore. Now coming to the cost, fuel expenses in Q2 FY26 grew modestly by 2.4% to rupees 7,205 crore from rupees 7,032 crore in Q2 last year due to higher volume and newly acquired plants. For H1 26, the fuel cost declined by 2.8% to rupees 14,514 crore from rupees 14,930 crore in H1 of last year. Other expenses increased by 24% to rupees 814 crore in Q2 26 from rupees 655 crore in Q2 of last year, primarily due to the full period operation of recently acquired plants and additional maintenance expenditure due to scheduled overhaulings. Consequently, continuing EBITDA for Q2 FY26 stood at solid and stable compared to last year. For the first half, continuing EBITDA was broadly similar at rupees 11,076 crore compared to rupees 11,692 crore in H1 of last year. Depreciation charges had increased in line with the acquisition of power plants over the last 1 year. We have maintained control over finance costs even as we expanded our operations. As a result of the flattish EBITDA, continuing profit before tax for Q2 FY26 was rupees 3,298 crore, against broadly similar to the continuing PBT of 3,537 crore of the Q2 of same last year. Continuing PBT for H126 was 7,096 crore as compared to rupees 8,020 crore for H1 of last year, in line with the continuing EBITDA and depreciation trend. There has been an increase in deferred tax, leading to a higher tax charge for Q2 and H126 as compared to the corresponding period of last year. Consequently, profit after tax for Q2 FY26 was slightly lower, but very healthy at rupees 2,906 crore compared to rupees 3,298 crore in Q2 of last year. Similarly, for the first half, profit after tax was commendable at rupees 6,212 crore as compared to rupees 7,210 crore in H1 of last year. Our total debt as of 30th September 2025 stands at 47,254 crore compared to rupees 38,335 crore at the end of March 25. The increase is mainly due to bridge financing for capital expenditure and working capital needs supporting our ambitious growth plan. Our net debt position remains steady and healthy at 36,776 crore. We are investing our strong and steady cash accruals into capacity expansion. We are following an efficient capital structure policy without a high reliance on debt. Thank you for your continued support. Let us now open the floor for question and answer. Moderator, over to you. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and then two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star and then one. Our first question comes from the line of Manish Somaiya from Cantor Fitzgerald and Company. Please go ahead.
Thank you, gentlemen. Congratulations. Couple of questions. One, if you can just talk about the expectations on the merchant and PPA tariff realizations in the second half, given softness in merchant pricing that we have seen so far?
Yeah. So, I'm repeating your question. So you are, trying to understand the expectation of PPA and merchant price movement in next half of this year?
Yes. If you can just give us a big picture perspective on how we should think about the second half versus the first half.
Yeah, good afternoon, Manish. As regards to PPA rates are concerned, there will not be any change in the PPA rates because the rates are obviously the long-term rates. And if the demand is less, it is only impacting the offtake. So there is no different expectation as regard to rates of the PPA are concerned. We have a average realization of 5.70 rupees per unit during this quarter, and we expect the same rate will continue to be realized because under the PPA rates are not getting much of changed. As regards to merchant realization is concerned, we have achieved 5.37 rupees as the rate during this quarter two. And for the balance period, we are expecting an average realization of around rupees, let us say, 6 rupees or so, which used to be the rate in the last few years. So that is what our expectation is. Thank you.
On the merchant portion itself, I think right now it's at 88%. SPK, are there any plans to try to increase that so hence to avoid the volatility in pricing? And how do you think about that?
As I explained in my presentation or the speech, that we have recently signed the PPA with the Maharashtra for a medium term of 5 years at the rate of 5.55 rupees. And we have now recently received one LOI from the state of Karnataka at 5.79 rupees or so. So we have already tied up beyond what we said earlier, around 1100 megawatt. So if I consider in the overall portfolio, I think now it must be working out 92-93%. So we are taking the steps to tie up more and more under the long term or the medium term PPA so that we can reduce the volatility impact. Thank you.
Okay, no, that's super helpful. I was trying to get to that 92-93%, and hopefully with more PPAs it'll be higher. So I appreciate that answer. The other question I have is on the capex. Obviously, you have a significant pipeline, locked-in pipeline. How should we think about capex? In 26, but beyond 26, and how should we also think about the funding mix between internal and external? Thank you.
Our capex program, we are generating a significant portion of cash flow from our operating assets. So the significant portion we will, the fund from our internal accruals. In next 2-3 years, there will be an interim, the bridge requirement of the capex that we will take from market, either in a mix of short term or the domestic capital market or domestic bank. So the significant portion we will fund from our internal accruals only. The interim gap we will fund from the market, and that is in the mix of maybe a domestic capital market and domestic bank.
Okay, super. Thank you so much for your help, and congratulations again.
Thank you. Thank you, Manish.
Thank you. Our next question comes from the line of Abhinav from ICICI Securities. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. My first question is on the Assam bid. Has the bid for 3.2 gigawatt been floated? What is the status over there?
You are talking about Assam?
Yes.
Okay. So, the bids have been concluded, and we are the L1 party there. The approval of the commission is also received. So, we hope that we should get the positive communication shortly. So, for the time being, whatever is in the public domain is that the commission has passed the orders.
Understood. Thank you. The second question is, can you share the revenue EBITDA PAT numbers for the two acquired plants, Coastal and Amarkantak, in H1?
Yeah. Just give me a moment. So, my revenue for quarter two for Mahan, it was 1,049 crores. Tuticorin, this is 677 crores. And Korba, 339 crores. If you will talk about EBITDA for Tuticorin, this quarter EBITDA was 54 crores. And then for Korba, it was 84 crores. And for Mahan, it was 521 crores. So let me repeat it again. For Mahan, revenue for the quarter was 1,049 crore, as against EBITDA 521 crore. Tuticorin revenue 677 crore, against that EBITDA 54 crore. Korba revenue 339 crore, and then EBITDA 84 crore. This is I am talking about operating revenue from the plant. Thank you.
Got it, sir. Thank you.
Thank you. Our next question comes from the line of Shriyam Kapoor with Jefferies. Please go ahead.
Yeah, sure. Am I audible?
Yes, sir, you're audible now.
Yeah. Thank you. Yeah, so as I was saying, you mentioned about 17 gigawatts of bids at various stages. Could you maybe break that up into which states are offering these bids, and what is, if you could just quantify that state-wise?
The bids are in the public domain, which Rajasthan is 3,200 megawatt, Uttarakhand it is 1,320 megawatt, Maharashtra 1,600 megawatt, Uttar Pradesh 4,000 megawatt, and West Bengal 2,260 megawatt. So it is 12,000 megawatt. And apart from that, there are bids which are an advanced stage of finalization. Karnataka 1,600 megawatt, Gujarat 4,000 megawatt, and Assam 3,200 megawatt. So, if we take the latest figures, the total is working out around 22,000 megawatt instead of 17,000 megawatt, because recently Gujarat has floated a bid of 4,000 megawatt, which was, I think, not included in the earlier figures. So, the approximate figure working out is 22,000 megawatt. Thank you.
Thank you. That's very helpful. Just want to clarify. So in your presentation, you mentioned that about 91% of your operational capacity is tied up under PPAs, and if we see in the later pages, about 8.5 gigawatts of the upcoming capacity is also tied up. So is it a correct figure that totally out of your 42 gigawatt target, about 25 gigawatts is tied up under PPAs currently?
So the new capacity which we have planned is 23.5 megawatt, and out of that 8.5 gigawatt Out of the 23.5 gigawatt, 8.5 gigawatt is already tied up under the PPAs. So that is a correct figure. And as I said that over and above this 3.2 gigawatt Assam bid, we are L1. And recently we have also tied up around 1100 megawatt from the existing capacity. That is, as I said, 500 megawatt Maharashtra and 570 megawatt Karnataka.
Sure, so that's helpful. Just to clarify, from the operating capacity, which is 18.15, how much of that in gigawatts is currently tied up under PPA, including the 1.1 that you have recently signed? If you could just give a gigawatt number to that, because there's 91% written on one of your pages and 88% on the others. Just want to get a clarification on that.
Give us 1 minute. Broadly, the figure is around 16,700 megawatt, because sometimes the agreement is at the bus bar, sometimes it is at the state fair fee. So there are some minor changes here and there, but broadly it is 16,700 megawatt out of 18,150.
Great, got it. So thank you so much. And just last question on, so you had a target of, you've obviously recently upped your target to 42 gigawatts by FY32 from 30 gigawatts earlier by FY30. So just want to understand in terms of planning, are we still on track for 30 gigawatts by FY30, which will then ramp up to 42 gigawatts by FY32? Just want to get a clarification on that. And of that 30 gigawatts of your original plan that was there by FY30, how much of that portion is PPA tied up, and excluding what's going to come after FY30? Just want to get a sense on that.
So when we are saying 30 gigawatt, that means it is addition of 12 gigawatt. So I think that must be clear to you. So we are talking addition of 12 gigawatt and then another addition of 12 gigawatt. So roughly 23.5 gigawatt in total. And the first 12 gigawatt is very much on track. We are going to, let us say, commission in next year around 3 gigawatt. Thereafter, we are going to commission 2.4 gigawatt. In next to that year, 3.2 gigawatt. And 29-30, 7.2 gigawatt. So we are going to commission more than the capacity of 12 gigawatt, which was planned earlier. In fact, from the second stage of 12 gigawatt also, to some extent, the capacity will get commissioned before 29-30. So there is no issues as regards to commissioning of first 12 gigawatt is concerned.
Got it. And of that, the PPA tie-up.
This PPAs which we have already signed are part of this up to 29-30.
Okay, understood. And so if I could just squeeze in one last question. Just on you've already ordered out your entire 100% equipment for the upcoming 23.7 gigawatt capacity. Just want to understand how much would you share how much of this has gone to BHEL and how much to L&T? If a rough split would be helpful.
I can give the broader number, not exactly. We have given 8 machines to L&T, 8 machines of 800 megawatt, and balance to BHEL.
Got it, sir. Thank you so much. This is very helpful. All the best.
Thank you.
Thank you. Our next question comes from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Yes, thank you for the opportunity. Couple of questions on Godda. So first is I think got the approval to connect Godda power plant to the Indian grid. Just want to understand by when can we get connected to the Indian grid? What's the process going forward? And also correlated to that, if once we do get connected, would we be allowed to sell power from Godda to the Indian market despite being in a PPA with Bangladesh?
We are expecting that it will get connected by December 25. And as regards to your second question is concerned, it is allowed under certain conditions, and the certain conditions are already mentioned under the regulations that when you can sell. So the conditions are either there is persistent no scheduling from the Bangladesh because of they don't have demand, or there is a payment default under the PPA. So in these two conditions, we will be allowed to sell the power in the Indian grid. And these are the precisely two conditions in which we would also like to sell. Otherwise, why should we be interested to selling in the Indian grid? So perfectly, it is basically going to address the issue. So if because of any reason, if the power is not being scheduled, or because we are not getting the payment, so both the conditions will get addressed. Thank you.
I got that. And that is helpful. On Godda again, if you could tell me what was the PLF for the second quarter, and at the end of 2Q, what's the total receivables now for Godda?
Hold for a moment. PLF. Yeah. So PLF was 72% at the end of the quarter two, which was 73% last year. So the PLF is more or less same, and PLF of Godda is much better than the Indian grid, because in Indian grid the PLF of most of the thermal power projects is between 60 to 65%. And as regards to outstanding payment is concerned, it is outstanding of only now 1.5 months. In any case, 1 month is not due. So out of the overdue, it is only half months overdue. Thank you.
Understood. It's just on the bids part. Two bids that I remember were in fairly advanced stages was the Rajasthan and the Uttarakhand. If you could, just provide your estimate or timelines on where the bids are for these two states. When do we expect finalization to happen?
I don't think we can estimate anything on behalf of states. We can only give what is the present state. So in case of Rajasthan, I think the bid submission date is in the next month. And in case of Uttarakhand, the documents are under approval of the regulator. So that is the present status. Thank you.
I know that. Just one last question. You mentioned earlier in your comments that the merchant tariff this quarter was about 5.37. Just to get a comparison, what was the same for the same quarter last year?
Last year, our average realization for same quarter was 5.88, and this year it was 5.37. So roughly 50 paisa lower realization has been in this quarter.
Understood. That's pretty helpful. Those are my questions.
Which is approximately 10% of the, let us say, tariff.
Yep, got that. Thank you. Those were the questions I had.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and one to ask a question. Our next question comes from the line of Vipul Agarwal, an investor. Please go ahead.
Yeah, good afternoon, sir. Again, congratulations for a stellar performance in Q2 and H1. Just wanted to ask two questions from my side. What is the total estimated capex for the 23 gigawatt expansion that we are planning now?
You are asking for the total the 23.5 gigawatt capacity?
Yes, sir.
So it is approximately 2 lakhs crore.
Right, sir. Right, sir. And you already answered the gearing question. Second is, out of the additional 23 gigawatt capacity, with regards to fuel linkages, are we being provided fuel linkages along with the PPA, or we will be applying for the fuel linkages?
No, since we have already stated that we will be tying up through the PPA, then nowadays every bid is coming with the attached fuel linkage to the state utility. So for all this capacity, fuel will be provided by the utility under the bid.
Okay. And third question would be, sir, these the new PPAs that we would be signing will be capacity charge for the fuel charge will be passed through. It's not like a single levelized tariff that was, because of which we had issues with Mundra, etc. earlier.
No, this under the new standard bidding documents, you have to quote for only first year. You are not allowed to quote for 25 years any fixed number. So therefore, only first year the number you have to quote, and in case of fuel, it is completely passed through based on a formula which includes the station heat rate, etc., which are the operating parameters. And capacity charge, there are slight variation in different states. So in some of the states, the capacity charge will go up by 30% of WPI and 2% every year reduction, whereas in few states it is up by 30% of WPI and 1% reduction. So more or less, the capacity charge will remain stagnant and fuel charge is passed.
Okay. Last question, sir. There was a news report dated 11 September where the management had given a guidance of reaching 70,000 crores EBITDA in 6 years. So this is accounting for the entire 42 gigawatts capacity, or this is just for the 30 gigawatts?
No.
Yeah, Mr. Agarwal, actually this was a media report. The management has not given any such guidance. So it was the media's own analysis on the on the basis of which it was given. But I think we would hope to actually achieve a better EBITDA than what they had projected.
Actually, I think that report was based on 30,000.
Okay. Thank you, sir. Thank you. So that will be it. Thank you.
Thank you. Our next follow-up question comes from the line of Manish Somaiya with Cantor Fitzgerald and Company. Please go ahead.
Thank you again for getting me back on. SPK, I think you mentioned that you have pre-ordered critical components for the expansion pipeline. Can you give us a sense of pricing on the equipment, vis-a-vis what you have paid before? I assume it's going to be higher, but just trying to understand if it changes the return dynamics because of the inflationary nature of what's transpired on equipment costs. So maybe if you can just help us with that. Thank you.
I think it will not be appropriate to discuss about the pricing of the equipments on a public platform. So I would not be in a position to give exactly pricing of the equipments because that would be let's say not appropriate given that type of numbers. So these are obviously confidential information, and in the competitive market, it is not appropriate to disclose these numbers. Thank you.
So let me ask you a different question. In terms of the delivery of the equipment, I assume that that's going to be meeting your timelines based on the conversations you have had with your partners. That is something that we can feel comfortable with, right?
Yeah, the deliveries which we have agreed is ranging from 38 months to 75 months in total, and these are staggered deliveries, and we are confident that we will get the deliveries as per this time schedule, because 4 projects, as we mentioned, are under construction, and all the 4 projects are ahead of the time in terms of delivery as well as execution. So we are very confident that we will get the deliveries as per the agreed time schedule, and therefore there is no likelihood of any cost overrun.
Okay. Thank you so much.
Thank you. A reminder to all the participants, if you wish to register for a question, please press star and then 1. Our next question comes from the line of Nirav Shah from GC Holdings. Please go ahead.
Yeah, hi, good evening, sir. Thanks for the opportunity. Most questions are answered. Just last one question. So we have commissioned a Dhirauli mine, and there was an incentive of waiver of the cess. But now in this, the cess has been already completely waived. So now in what form will we be incentivized on the mining?
So Dhirauli mine, the compensation cess is one of the activity. Apart from that, Dhirauli mine is actually, it is very nearer to our the plant Mahan. So there we have already 1 operating unit. That 2 more phases are coming over there as an standby arrangement. So yes, compensation is one aspect. Apart from that, there will be huge logistics advantages in terms of the Dhirauli mine. And for Dhirauli mine, we are expecting that by end of this year only the box cutting will be there, and from next year we will have coal from that mine.
So the incentive of if we consume the coal within the state, the 400 rupee incentive that was there, I mean now it will no longer be there. Is that fair to say?
No, there is no incentive so far compensation cess is concerned. Compensation cess is driven by the GST Act, not by any the state incentive.
Okay, so the incentive is
it was a comparative, let us say, incentive, not in real terms incentive, and as per the new structure, there is no negative impact.
Okay. So, but no positive, that's why it's neutral.
Most of the domestic market, the impact is positive. But since the positive or negative, the change in law is to be passed on to the customer as change in law. So to the company, it is hardly anything.
Got it. Great, sir. Yeah, that's from my side and all the best, sir. Thank you.
Thank you.
Thank you. Participants, you may press star and then 1 to ask a question. Our next question comes from the line of Nikhil Nigania with Bernstein. Please go ahead.
Hi, thank you for taking my question. I just had a couple of questions. Number one, it's interesting to see so many tenders coming for thermal, even from renewable-rich states like Gujarat, who have also doing a lot of battery tenders, and battery prices are going low. So wanted management's view on what do you think is driving it? I mean, we understand the need for baseload power, but it's still surprising given states like Gujarat, as you said, have also started reaching out for thermal PPAs. So appreciate your view on that.
What is your question?
So,
given how cheap renewables have...
Yeah, please continue.
No, I was just saying, given how cheap batteries have become, and renewable as well, together with batteries. I was finding it surprising that so many more thermal tenders are coming, even from renewable rich states like Gujarat, which you mentioned, is also looking to do a thermal PPA. Wanted your view on what is driving this strong demand for thermal contracting of late.
So I think you yourself has commented that it is for the base load. So obviously, the thermal is for base load, and the tenders for battery, whatever has come so far, are of let us say for the token quantum. It is not really going to meet the base load requirement. Even the Government of India's projection of installing batteries up to 2030 is a fraction of the total demand. So it is expected that the thermal will only be supplying the base load power, and therefore every state is coming out with a tender for the thermal projects supply. And if you will see the resource adequacy report of Government of India, they have provided all these resources, whether it is solar, whether it is wind, whether it is battery, and thereafter have worked out the requirement of thermal installation. So the tenders which the states are coming out, they have already considered the possibility of installation of battery, and the tenders are coming after considering the battery plant under these studies.
Got it. Understood, sir. A related question on that, most of these tenders, are you seeing a need to set up the thermal plant within the state, or are they fine being it somewhere else and you get the coal resource allocated to the state?
Every state is taking its own call because there are many negatives and positives having the power station in the state or at pit head. If you install a power station at pit head, you save in the transportation cost, but then you pay the transmission charges and losses. Apart from that, states are also evaluating. If you put up the power plant in the state, you get a huge amount of GST, not only on capital expenditure, but also during the operations, because GST is the consumption-based tax. So in whichever state the ultimate product is consumed, so in case of operations, the coal is consumed in the state if the project is installed in the state. So there's a huge benefit of GST revenue on the CapEx as well as OpEx. There is a huge possibility of the employment generation, as well as the installation of ancillary industries in and around a thermal power project. So these are the benefits. On the negative side, if you put up a power plant in the coal-bearing states, every state is asking something at variable cost. So like in case of Chhattisgarh, it is 5%. In case of Odisha, it is 12%. So if you supply 5% or 12% power at variable cost, that means the capacity charge of that quantum has to be loaded on the rest of the power. So these are pluses and minuses of putting the power plant at the pit head or within the state. So every state is taking their own calculated decision. Thank you.
Understood. Appreciate the color. The last question I had is related to the point you brought up. So now GST has increased, but cess has gone away from coal. So net for most plants, we should see a reduction in fuel costs. Has the discussion started from states to reflect that as change in law in the tariffs, or not at present?
So it is different position from state to state. Some of the states has issued the change in law notice, and some of may be issuing in due course because it has happened last month only. But in any case, because it has happened, so from the date of notification, in any case, it has to be passed on. So it is only a process part where they have to issue the notice of change in law, and then they have to file a petition before the regulatory commissions where they have to get it determined. And CRC, as you may be aware, has already initiated a suo motu petition to pass an order in this regard.
Perfect. Thank you so much. Those were my questions. Thanks for asking.
Thank you.
Thank you. Participants, you may press star and then 1 to ask a question. As there are no further questions from the participants, I now hand the conference over to the management for the closing remarks.
Thank you very much for the time and patience to listen us, and we hope same level of cooperation in subsequent quarters. Thank you. Thank you very much. Have a great night. Thank you.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.